What's up, everybody? I am back with another edition of the Sunday Scary Stock Talk podcast. But first, before I get into the rip, I'd like to shout out Financial Stock Data at financialstockdata.com. I encourage everybody to check it out. And if you want to use their premium tool, you can get the first month free with promo code GCI, as in Green Candle Investments. The premium tool allows you to use their entire platform, get a watch list. You can set all kinds of alerts regarding a stock, whether it reaches a certain PE ratio or something. It'll also shoot you an email. So then you can know when you want to buy or sell, as well as there's a radar chart. So you can discover new companies that might reach your format or reach, what you want to buy in. And a ton of great information, all for you to make an educated decision on your purchases in the stock market. So I encourage everybody to check it out, financialstockdata.com, promo code GCI, and get your first month free. Now, I normally have a guest on this show and on every show, but this is going to be a very special solo rip this time. So I think I wanted to kind of peel back the curtain, let everybody know a little bit more about myself, a little bit about Green Candle Investments, why I decided to start it, and much more. So let's start it kind of take it back a little bit. So who am I? I am Brandon. Many of you probably know me. This probably isn't your first time hearing me or finding my content or something like that if you're listening to this. But if it is, welcome, and welcome to that Green Candle family. And reach out to me and let me know what you think. But anyway, I am an engineer by trade and now a data analyst. So I've always kind of been intrigued by numbers and kind of had a very analytical mindset. So I've always been just sort of fascinated with math, science. So logically, while I went into college, I was kind of swayed into going into engineering, which was great first initial career, but I've always kind of had an interest in finance and money, the way money works. After kind of living through the 2008 crisis, although, I was just a freshman and sophomore in high school kind of during that time, it really opened my eyes up to a lot because I saw, a lot of families struggle. I saw my family struggle a little bit as well. And, I just realized during that time that I didn't want to ever feel that suffer. I never wanted to feel that, financial crisis or something like that. I didn't want things taken away from me without my control. I wanted to basically make sure that I could make myself and my family, whether it's a future family or my current immediate family too, help them out in any way, shape, or form that I could. And so I began educating myself on finance, and by like listening to podcasts, reading books, all that kind of stuff. In late college, early grad school time. So I began driving Uber. So in between picking up drunk college kids at the bar and dropping them off at the bar districts, I was listening to a lot of financial and business sort of podcasts. So my initial goal was to start educating myself before I kind of got that first big boy job. And I also opened an account with Acorns. So for those that don't know or are not familiar with Acorns, it's a robo-advisor, which a robo-advisor is essentially like a financial planner, financial advisor that automatically updates your portfolio kind of based on a computer program. And that is done. The cool thing about Acorns is when I first started, it was free for college students, and it did this thing called roundups. So what a roundup is essentially you spend $9.50. That other additional 50 cents is then invested for you into various indexes like the S&P 500. And so you can kind of set your portfolio to conservative, aggressive, and like very just kind of like the in between moderate and all that kind of stuff. So I think it's very good for beginning investors, and it kind of helped me get started in the whole investing game. And so if there's anybody that is kind of getting started and doesn't know where to start, I always think that's a good place to start because you can kind of learn as you're putting in a little bit money. And once you start to put in a little bit of money, that kind of like drives it as well. At least it did for me. And so as I kind of continued along this journey, reading and listening to a lot of podcasts about personal finance, I kind of moved into Robinhood, which kind of allowed it for, a little bit of gamification of investing. I was more so thinking like about trading and kind of, like I said, I was in grad school at this time. So I was thinking about ways that I could make my money that I was getting from Uber a little bit, go a little bit farther. And that way that I kind of saw initially was through trading. And so I did that and it was good. I mean, it's everybody kind of looks like a genius in a bull market, but unfortunately, not everybody is a genius. And it's really tough in times, especially like this, like right now. So we'll kind of get into that macro a little bit later. But um, I was able to make some more money and help that go a little bit farther. So it was nice while I was in college. But yeah, once I kind of got my big boy job, that's when I kind of started to learn more about the fundamentals, just the long, steady ride. I didn't really necessarily need all that expendable cash that I was making from stock trade. So I was looking at more buy and hold. And I was thinking about other things like retirement and all that kind of stuff, but it wasn't always smooth sailing. I think a lot of people underestimate like the difficulty of investing, and I kind of did that as well. So one thing that I did, learn from my parents was my mom always pushed me to get a Roth IRA. And I did get one when I was 18, and I put some money that I got from like high school dead end jobs in there, and then also kept like a high yield savings account for a future house. And I'll get into that later. But that house or that Roth IRA, I put it in, I think it was like a Vanguard or something along those lines. And it was very confusing, especially for a young kid who's never really dealt with anything like this. So I opened the account and I put the money in, and the money was there. And then recently I went to switch to a different Roth IRA provider, and found out that my money was never invested. It was sitting there the whole time without that. So luckily, it wasn't very much money, and it was just kind of sitting there. And I've been able to get like a 401k through my employers and everything like that. So it wasn't necessarily a big deal, but it was a big lesson learned for me to always kind of, be on top of your investments, especially if you're trying to manage it by yourself. So I guess back to my Robinhood kind of grad school early, early, I guess, first big boy job. So that then when I was listening to podcasts, I kind of found my way into Bitcoin and more stock picking. And that's when I really, I think, kind of went down the rabbit hole of stocks and Bitcoin and real estate as well. And so, yeah, I graduated college and got my first big boy job. And I started putting money into three different piles: Bitcoin, stocks, and saving for a house. And then, I kind of got around the time of the halving in 2020, and I started aggressively putting more money into Bitcoin after that, COVID crash, because I thought that, it was a very great buying opportunity. And so, yeah, it's ended up being doing pretty well for me. And so I did that, and as well as like started rapidly saving for a house. And so because I was saving for a house, I ended up buying one in September 2020, and I bought a duplex. And now I'm Airbnb-ing out part of it and living in half of it, which has been great. I have a friend managing it for me, and yeah, I mean, it's overall been pretty successful so far. Is it in a bubble, or am I worried about long-term potential, people not renting it out? No, not really, because a lot of people where I live in Tampa, Florida, are, a lot of people are moving down here by the day. And so I think people are always going to be looking for places to live. So even if the Airbnb thing doesn't work out, I think, long-term tenant would still be a viable option. But anyway, I kind of started learning about all these things and learning about different ways to invest. And because of that, I started telling a lot of my friends about that. And so this kind of leads me to the story of why I started Green Candle Investments. So I I initially then went into trying to educate my friends and my family. I got my family, my siblings onto Acorns and other things, and I tried to get my friends kind of started on that stuff, and it wasn't really well received. And so I knew that there was a lot of people out there that were similar to me that were really looking for information that wasn't super technical. Because I think like a lot of the content that I saw out there was from a lot of financial guys, a lot of people who have been looking at this for a long time, or a lot of people who have been down the line in real estate. And there wasn't really like the average Joe just kind of learning in public. And so all these things that I was learning, I was sending to my friends. And finally, I had one friend, Dan, who started this with me, but he eventually, he got a new job from a lot of the stuff that we put out. So he's not doing this with me anymore. But he having him initially, I think, really helped with the accountability, because I think at the beginning we were both putting out a lot of content, and it is tough. It is a tough game initially, because a lot of people you're writing, you're spending a lot of time kind of stressing about these things, and it's not being seen by a lot of people. And it's still like I'm more than a year in, and I got, a decent sized Twitter following that I never really thought I would have, but it's still to this day, like some of the things that I put out just doesn't, have it doesn't take off for amount of time I've put in. But that initial base of just like saying like, hey, reflecting back to when I was in the initial stage of investing, I think that's what kind of keeps me going and kind of keeps me, wanting to keep doing this. And I enjoy it. And I enjoy, having these conversations with a lot of brilliant people. And I think what I wanted to do initially was just educate friends and family and kind of open the eyes of others of ways to invest, whether it's in the stock market, real estate, Bitcoin, or some other ways. Like I know you can invest in wine and some of these other things now too, which is kind of cool, and it's becoming more of, I guess, a cool fad topic. And so what I want to do is kind of help people filter that information or provide a lot of information, whether it's like newsletter, news articles where, people can, kind of look at Bitcoin, see what is going on off chain, even though to help get kind of some conviction into their investment. And then it's also like looking at how I invest in stocks and other things, where it's not only looking at the bullish and the bearish arguments, but it's are looking at just the bullish arguments. It's looking at the bearish as well. And so, I think overall, I'm excited about where Green Candle's going, and I think that uh, selfishly, the opportunity to talk to a lot of really educated and people and investors and people who have doing this a long time has made me not only a better investor but a better person looking at these principles and things like that. Because I think as Warren Buffett says, investing kind of teaches you a lot about yourself and in life as well. So I think overall it's been great. And it has kind of helped me develop my investment journey over time. And so that investment journey, just as I kind of went back and stated at the earlier, was just, doing initial research, then going into like a robo advisor like Acorns, and then, more getting into the gamified stock picking, buying and selling with Robinhood. And then now I'm doing more buy and hold based on research and my core beliefs about where things are going. And so I think that along with this crazy macro environment has kind of made me reflect a lot on like what my investment goals are for the future. And so I'm not, I have, a very small, I would say, stock portfolio compared to what I have in other investments, as in Bitcoin and in my real estate property. But that's just simply because like it required more, upfront cash, and for the real estate property. And in Bitcoin, it just shot up so much more than stocks did. So I think my next investment goal is to get another real estate property, because eventually I think, I need to find a way to kind of get diversified and get some more cash flow. Now, granted, do I think real estate is going to be perfect and is not going to crash or anything like that? No, I'm not saying anything like that, or I'm not doing it based on any prediction. I just think that there's certain investments that are great for long term, and there's certain, and it really depends on your investment goals. And so I'm kind of peeling back the curtain to show that, look, like I speak a lot about various investments. I'm a Bitcoin maxi. I believe in a lot of the stock market. I believe in a lot of companies, but your goals of your investment really matter about your overall outlook and what you're trying to get out of it. So I think, part of me wants the cash flow aspect of real estate, and another part of me wants like the long-term aspects of stocks and Bitcoin too. But in the meantime, I need to be able to get that cash flow in order to help the long-term investments grow. And so that's kind of my next hurdle that I want to get over. And when is that going to happen? I don't know. I live in a kind of a tough market right now, and I think that will kind of continue. Maybe it'll slow down the growth, but I don't know. It's a lot of people are moving to Florida. So, and this is kind of my first experience in real estate. So hopefully, everything goes well and I can get that. And if anybody has any tips or something like that, or some good material to kind of help me get that way, feel free to reach out and let me know, because like I said, it's all an interaction and a learning experience. And so, how do I see the next question I want to kind of answer is, how do I see the investment landscape changing? And I think this is a very interesting question that I want to start asking a lot of I want to start asking a lot of the guests that I have on my podcast, because I think that there's getting a lot more publicity as far as investing goes. You'll see it in the news a lot more often, especially with the GameStop stuff. You see a lot of these various things just kind of shoot up and go to the moon. And that's what people are always FOMO buying in, is all these big shoot ups. But there's also, those stories that are big shoot downs, but nobody really wants to talk about those. And so in the end, I think that the gamification and kind of the publicity is going to get more people into it. More people are kind of in turn able to experience volatility and kind of not panic sell. And I think that that's good in the end. But I think, like, in the end, fundamentals are going to kind of make a roaring turn back. And so I think, initially there's going to be some gamification, as I said, with Robinhood. And what I also think too is, like, soon the markets will never close, like, meaning the ability to buy and sell will be at all times. We're already seeing Robinhood kind of extend trading hours, where you can buy before the close, or before the open and after the close. And I kind of see that trend continuing. I wouldn't doubt it. Like, if, you could buy it before the close at, 1 a.m. And although the business trading hours would still be maybe the same time in the US, I think like the ability to buy and sell stocks at any time will kind of occur, because the overall investing landscape is forcing people to become like just essentially traders. Like, every single person that needs to, or that wants to keep up with inflation, now has to become somewhat of their own portfolio manager. Granted, like, they're just maybe managing their own personal, or like them and their immediate family's personal or whatever, but that thing is going to kind of continue. That trend is going to continue, where everybody's going to have to become essentially a stock picker, just, looking at some of these things. And I think that makes it more difficult for the person who has that 9 to 5, right? And so, because they have that 9 to 5, and then they need to go back and now become like a stock picker, I think that is going to kind of push uh, consumers on like trading platforms like Robinhood to demand the ability to buy and sell stocks at any time. And if that trend continues, which I kind of see it doing, because like inflation is rising, I'm going to talk about it here in a sec, but the CPI print for the month of May was 8.6%, and wage growth was only 4%. So literally, inflation was more than double the amount of wage growth. And so, because of that, people are going to have to find ways to make up that 4.6% gap. And in order to do that, they're becoming stock pickers. And, granted, I think it's good in the fact that people are kind of figuring out how to grow their wealth, but it's bad in the fact that it's becoming a second job, and it's stressing a lot of young Americans out, and they're having to deal with a lot of things that, we're already seeing it. Families are delayed. Maybe people's dream of buying that house with a white picket fence is going away. A lot of different things are changing, where it's not necessarily encouraging people, to protect their wealth. They're doing it out of necessity, which I think is a huge, huge problem. And so that brings me to the macro outlook. So I think, like I said earlier, the CPI print of 8.6% is extremely troublesome. Where I've talked about this, multiple times with different podcasts, but that millennial generation, Gen Z, like all these generations that are kind of growing up in this extremely, extremely inflationary times, are just going to be the ones that are suffering, because they're the ones with no assets. They're the ones who are 401ks are kind of just starting, and they're starting off either slow, or they started off pretty good and then now they crashed immediately, and they're the ones that are going to have to deal with all this inflationary pressure, where these prices of these goods are going to go up. But do they generally go back down? My answer is probably not. Like, Apple's charging, I don't know how much for a new phone. Like, do you think that the new rendition of Apple's iPhone is going to be cheaper than what they put out this year? Hell no. Of course it's going to be more expensive. But now you need a smartphone, and now you need to pay for those unlimited talk and text. Now you need faster internet. The entertainment of wanting streaming services and other things now is going up, and everything's going up around you. And it's not only like entertainment things, it's food, it's gas, it's everything like that. So I think, more people are kind of trying to FOMO into the stock market or find ways to do it. And we saw a really popular way of doing that previously was growth stocks. And in my opinion, growth stocks are going to be the ones that are going to be hit the hardest, because CPI print is massive. The Fed's going to need to raise rates, making easy access to capital a lot harder, right? So a lot of these companies didn't make money. They pulled the Amazon model, which works for a company like Amazon, but it doesn't work for every company. And that, they get easy access to capital, and then they keep investing it back in the business, and they don't necessarily have to make money initially, or they don't make money at all, for the near future. And because they do that, then then they think that they never really have to make money. They keep pushing it back, pushing it back, pushing it back, and then the stock price does well. So they think, hey, it's not a big deal that the stock price is down, or that they're not making money, because the stock is doing well and the outlook long term is good. But it's like, all right, well, when is that long term outlook going to change, and when are they going to actually start making money? They're going to have to start raising prices on things like Uber, or like a Facebook, or like something like that, where these growth stocks just immediately shot up. And now I think that there's going to be a reckoning for a lot of these poorly run companies. And so I think growth's going to take a huge hit, and value, which has been kind of lagging behind a lot of these growth stocks, because they've shot up exponentially and kind of like inexplicably shot up. I think that that's going to continue. And I think that value will rise, and like previous fundamentals that people never really saw are going to kind of continue and shoot up. And so, yeah, I mean, I think it'll be an interesting time. Do I think like we're at the end or we're in a recession? Yes, I think we're in a recession. And no, I don't think we're in the end. I think we're going to see a few more tough years of this, unfortunately. And I think, a lot of people, I've heard a lot of people say that it's not the 2008 or it's not, similar to that crash. But yeah, I think the stock market's going to take the biggest hit in this one. Will real estate be affected? I think so, but I think it'll be different in different markets. So you're seeing like a mass exodus of a lot of blue states moving to red states. Like a lot of people, I think the top three states that people are moving out of are New York, Massachusetts, and California. And they're fleeing to states like Texas, Tennessee, and Florida. And I think that that trend's going to continue. And so the states where people are fleeing to, like Florida, Texas, Tennessee, those prices are going to rise, maybe not at the rate that they're doing it right now, but I think that they're going to continue to rise. And real estate in states like New York, California, and in other places is going to start to fall. And so, how am I preparing for an impending recession that I kind of think is afoot? I mean, right now, like, it might be kind of a cop out answer, but I am young. So I am investing for the very, very long term. And so I'm kind of continuing the strategy that I have and investing in companies that I now, the ones that I invest in, I really, really have to have a strong conviction in those investments. And because I do on the ones that I am investing in, I'm going to kind of continue buying and just like dollar cost averaging in. And I think, that's the way for me that I do it. That's the less stressful. And I think, anybody that is kind of coming in and is thinking about investing, I think that's the way to do it, is just DCA and chill. And so to wrap it up, any advice that I would have for newbie investors is essentially exactly what I say, just like find conviction in your investments. Once you find conviction in your investments, you can ride those volatility swings. Why do you think Bitcoin maxis can ride these 50% drawdowns? And it's simply because they have so much conviction in Bitcoin and the technology. Granted, like, I don't think that you should do anything like that and be stupid with any investment. And I also, am not a financial advisor, but what has helped me is that I have conviction in my investments. So, I don't need to check it every day. Like losing money on paper and losing money or gaining money on paper, I kind of have like the same reaction. Sure, it's always nice to see that number go up, but I think having conviction in your investments helps the most within a bear market. And so I just implore you to do your own research, kind of figure out ways to figure out how, what you're investing in and what those things might, what the backings of that company is, and kind of whatever justification you need, whether it's the impeding financials or it's like the fundamentals of the company, what they do, the business, the product, whatever you believe in that company that'll help you invest it. I think that that's the most important thing. And so, yeah, I mean, I've kind of been doing this solo rip here for just about 30 minutes. And that's kind of where I wanted to end it is around this time, because talking to myself and listening to my own voice for that long period of time is kind of exhausting and funny too at the same time, because I'm essentially just talking to my computer screen here. But if you guys like this episode and like me kind of peeling back the curtain and letting everybody know a little bit about myself and the investing strategy and how I look at things, let me know. I mean, if you hated it and never want me to do this again, that's fine too. I'm just here for the guests, and I want to, or here for the audience. And if you guys want me to bring on more guests, then let me know. And if you want me to, if you have any suggestions of who to bring on too, feel free to reach out or shoot me a DM or something along those lines too. So, overall, I'm bullish on just the knowledge sector and people like learning more about investing as a whole. But I think that bear markets make for good investors. So if you guys can kind of learn and figure out the ways now to justify your investments, I think it'll make you even stronger in the end. So on that note, I will wrap it up. Subscribe to this podcast wherever you get your podcasts. Follow me on Twitter at Green Candle IT. Subscribe to my newsletter, greencandleinvestments.substack.com. Subscribe to my YouTube. And follow me on Twitter so you can see those great Twitter spaces where I'm learning a lot as well. So on that note, I am out, and thank you so much for listening.